First of all, good morning. And I think as far as LTIMindtree is concerned, I think numbers were quite disappointing, both on the revenue as well as on the margin front. And I think clearly, I think in terms of the growth on a sequential basis, the performance was more or less flat on the revenue side. On the margin side, also, I would believe that, if one were to look at it, I think it would now take at least a couple of quarters before we could see some meaningful recovery. So I think, investors who are holding the stock can continue to hold. I mean, a decent kind of corporate with a very good order book, but I think execution is going to be the key element. I would not suggest fresh buying even at these levels unless and until we get more clarity on the growth quotient, which is going to happen over the next couple of quarters. So I think investors need to take a slightly longer term call. Those who have invested should at least look at the next 12 to 15 months for a meaningful recovery. I think fresh buying, I would believe that even at these levels, valuations appear to be fair to expensive. So I would prefer to wait for some more time. And obviously, once the March quarter is out, at that point of time, we could take a fresh review. But as of now, it's a hold, no fresh buying recommended. From a longer term perspective, I think this is the second large order which Aarti Industries has got. Earlier, they had got a 3,000 crore order, again, which was a long term contract. This is a 6,000 crore order. So my sense is, definitely if you are looking at the revenue visibility side, it gives a decent amount of comfort for the investor. My sense is that if you have a 12 to 18-month kind of time frame, it seems that chemical prices have stabilized. I think in terms of margins also, we could expect a decent improvement going forward. So yes, from a longer term perspective, I think one can definitely look at accumulating the stock. But in the near term, I would not expect any big upside, considering the fact that these contracts, the revenue flow has to yet begin. And once they start, then they would start contributing to the top line profitability and the cash flow. So I think longer term, yes, if one were to look at 12, 18 months, it's a decent bet in the current scenario, but you need to have a longer time frame to get a decent risk reward. No, I think, Alex, you're right in saying that, the stock is to be viewed currently as an opportunity, and only the narrative is being played out because, the recent quarter three numbers were quite disappointing. The company did not post very good set of numbers as compared to the second quarter. And I think, the company is in the process of setting up its operations. They have tied up with BlackRock for the AMC business. I think very soon they'll apply to SEBI. My sense is that unless the investor has got a 2 to 3 year kind of time frame, investment in such kind of stocks could yield returns only over a longer period of time. In the short term, quarterly numbers are not going to depict the real earnings potential of the company. But I could tell you one thing, that with a balance sheet size of 1,40,000 crores, they are going to create a massive disruption in the financial services sector. I mean, when the numbers would come in and what could be the impact of those numbers on other comparable larger NBFC players is a thing which all of us would watch out. But I would believe that yes, if you want to make a decent risk reward and a large kind of moat here, I think the time frame has to be long. So if the investor has invested here, he should rest assured be positive that this company would do well. But yes, over the next say 2 to 3 years, in the short term, one should not expect any major fireworks here. First of all, the investor has bought in at a very attractive price, and my sense is that the margin of safety for that investor is pretty high. See, looking at the business model of Zomato, I think one thing is very clear, that the new generation of youngsters, prefer apps like Swiggy and Zomato, and I think it's now become a daily habit. So I think clearly over the next say 2 to 3 years, Alex, one could see profitability kicking in both at the operating level and at the cash flow, at the operationally free cash flow level. Clearly, these kind of platform companies are difficult to build, and you don't find many competitors in this field as of now. So I would say that yes, if the investor has got the next 2 to 3 years in mind, he can make a massive amount of money, because this business is going to thrive quite significantly considering the behavioral habits and the food consumption habits in our country. Most importantly, I think now recently we heard that even the platform fees Zomato has increased for most of its vendors. So, that is also going to be clearly a significant moat for Zomato going forward, because clearly this platform is a thriving platform. Many new businesses want to showcase their products on this platform. So I think longer term money will be made. In the short term, it's going to be remaining a range bound. So I think if the investor has a 2 to 3 year call, he can buy on declines and obviously add on to his quantity.
Right. Next up, we have a question from Umapati, and they're talking about Dabur, and they want to buy it for the longer term. Now, we've seen rural consumption weakened, but in the longer term, would you suggest buying Dabur at these levels, Avinash?
Yeah, I think clearly, most of these FMCG companies have a significant moat in terms of their distribution network, in terms of their brands. in the short term, there are going to be some breaks as far as the rural demand goes. My sense is, if the investor again has a long-term view of at least 12 to 18 months, then I think Dabur definitely can fit in the bill. The management has been quite mature. I think they have right products for various, customer categories. But I think in the very near term, if rural demand continues to remain weak, then I think you could expect a weaker set of numbers for the December quarter and possibly for March 24. So I think keeping a long-term view, I think one can look at it, but it's better that we, wait for the Q3 numbers, wait for the management commentary and some key data points on the volume growth number, which the management would share. And then I think one could take a call whether one could make a fresh entry.
Got it. All right. Shivashankar from Bangalore is asking this next question and asking about Tata Technologies and Yes Bank. I will go across to you, Rahul, on the technicals. What would you suggest with regard to these, or rather, actually, Tata Technologies? I'm not sure if you have enough data, but for Yes Bank, can you tell us?
Yes, definitely. The data for Tata Technologies is really low for me to make any statement here. But yes, Yes Bank is something which has been turned up really well.
The question is whether or not it can be bought at the current level. Avinash, what do you say?
Well, I think, Alex, if the investor has a 2 year kind of time frame, then I think Tata Technologies, which issued shares at roughly about 500 rupees and now trades at 1140, 1150, can definitely be accumulated. See, this is a company which operates in a very niche space and which enjoys a large amount of global clients. And I think the kind of pedigree and the kind of management bandwidth which this company enjoys, I would not be surprised that a lot of value creation can happen over the next 2 years. In the short term, the markets would obviously look at the near term, quarterly earnings, the management commentary. But I think this company has a great future. I think you need to have a lot of patience. And if you have a time frame of at least 18 to 24 months, I think you should accumulate a small quantity. And I think wealth creation would definitely happen. But I think you need to give some more time here. The railway sector, Alex, looks pretty promising because, recently the railway minister, Mr. Vaishnav, has clearly hinted that this is going to be a key focus area for the government, and a lot of cargo which now goes on road transport, the railway is planning to get it back on the railways. So I think, in terms of rolling stock, in terms of the railway stations, in terms of other infrastructure kind of facilities, a lot of capex is going to be invested, and obviously which would benefit, companies like Titagar, companies like, obviously, IRFC, which obviously funds the capex of the government for the railway ministry. I would believe that, stocks like Texmaco Rail appear to be quite promising because now it's a question of relative returns. In terms of absolute gains, most of these stocks have almost doubled or trebled in the last 12 to 18 months. So especially in case of stocks like Titagar or stocks like IRFC, I would prefer that, unless they correct meaningfully, it's very difficult to make near-term money in these stocks. So I think unless you got a 2 to 3 year kind of vision, it's difficult to make money here. So Texmaco appears to be slightly better positioned as compared to Titagar, which is fair to, premium valued as of now. So I think it's better to, sit on these stocks if you're already invested, but fresh buying can only be advised at lower levels, not at the current prices. Now, I think Balrampur Chini, according to me, Alex, is an integrated sugar player. And I think now with ethanol pricing again going up based for grain-based ethanol, I would believe that, companies like Balrampur Chini definitely look promising, but I think you need to stay invested here for the longer term because, currently crude prices are down. I think obviously that means that ethanol is definitely, not that very important, although the government has said that by FY25, they will go up to 20%, blending. My sense is that you need to take a longer term call. In the short term, the stock may not give you that kind of upside. And which was the other stock, Alex, which you mentioned? This is a kind of an EPC play, and I think they have a decent order book, but it's a small kind of a market cap company. My sense is, in such kind of small caps, liquidity is a major issue. So unless the investor can brace in for a higher kind of volatile kind of situation going forward, unless that preparedness is there with the investor, only then one can look at investing in this company. I think the numbers have been pretty good, but overall, I would believe that it's always better to play, in the larger cap and in the largely more liquid kind of counters. So I would believe that, unless you have not bought in, if you have already bought in, you can hold on. But fresh buying is not advised because in the current scenario, Alex, the small cap, mid caps have been battered down very badly. So I think it's better to stay put for some time on the, stocks like Salasar, at least if you are thinking of a fresh entry. As far as private banks are concerned, I think we have seen the numbers of HDFC Bank. I think the key challenge for the private sector banks is now the deposit growth. So I think it's better that the investor waits for Q3 numbers, gets to know what the management commentary is. My sense is that see, ICICI Bank is the holding company for various businesses. Like ICICI Pru has put up a disappointing set of numbers, but ICICI Securities has come with a good set of numbers. So the core business growth continues to be solid. But I think what happens on the deposit side, on the disbursement side, I think once we get the Q3 numbers, there would be more clarity. So as of now, I would suggest the investor to hold on. Please don't make a panic exit. And I think broadly the story remains pretty strong with a strong corporate capex, with a strong infra kind of spending moved by the government. Private banks should do well. So I would believe that at least hold on for the next 6 to 12 months. You could definitely get your cost price and a decent risk reward.
Avinash, thanks so much for that view, and as well as Rahul. Rahul, thank you so much for joining in and answering all the questions that you did. We're completely out of time on this particular edition of Ask Profit. Hopefully, the answers that were given on today's show benefited you, even if your specific question was not answered. We'll be back tomorrow to take even more questions at 11:30 sharp. Don't go anywhere. Lots more coming up over the course of the day, and this is NDTV Profit.
As and when the markets open up, as and when the deals ramp up, we want to ensure that we can invest